Guys, good morning to you both. I mean, we have major averages all down significantly again this morning. The S&P down another 2%. 42.95 is the level there. Jeffrey, I'll start with you. Is there more pain to come? And I ask that knowing that this is a week with a trifecta of news potentially between earnings, the Fed, and also all the geopolitical risk that's simmering as well. I mean, are there certain signals that you're watching for to know that we are hitting a potential bottom in this correction right now, or what would you be looking for?
I think earnings are really important, but we're also going to be getting economic data here for the month of January starting to roll in like the PMIs this morning that are showing that Omicron is having an impact, negative impact on services. We've seen that in the numbers here. We know that in like open table reservation data. We're really seeing services really pull back very sharply. Of course, we know about the potential invasion of Ukraine by Russia and the looming start of a Fed tightening cycle. But I think if investors begin to shift their focus out a little bit, and they may this week and next week, given the earnings releases, they ought to look to a brighter Q2. The rebound from Omicron in Europe, given pent-up savings and fiscal stimulus and inventory restocking. I'd note that Russian conflicts in Europe have not led to sustained stock market sell-offs in the past. And I think that there's reason for investors to consider buying the dip here. They may want to favor, however, buying European and value stocks that have led when interest rates were headed higher in the past.
Interesting. I definitely want to dig into that a little bit more. But first, Anne, I'll put the same question to you, especially this idea of, quote unquote, normalization and normalized growth, since investors do seem to be trying to wrap their arms around what that's going to look like in a post-pandemic world right now and how that's playing out in the market.
Yes, certainly our investment teams are assessing that. And as you look at Q4 earnings, they're going to be looking at that last week when we saw earnings surprises on the downside from certain companies. We saw those companies be punished more. But as Mike alluded to earlier, the contagion is spreading pretty wide in this first phase of the sell-off. And I think some areas have been hit harder than others. And, you know, it is a time for stock pickers who are willing to look at company fundamentals to go out and start looking now and putting together your buy list. Certain segments of the market have great opportunity.
So, Jeffrey, I mean, the situation with Ukraine and Russia right now, which certainly seems to be a risk that is mounting, and there are many question marks around. I realize in general, geopolitics is something, at least from an equity market standpoint, that tends to be shrugged off by investors, but it's certainly adding to the maelstrom, if you will, this morning of negative sentiment in general. And there are areas where this could potentially have a bigger impact. I think about oil and commodities, for example, at a time where we are talking about inflation and we are talking about the Fed. Are there certain areas to just steer clear if you are concerned as an investor about the potential with geopolitics?
You know, historically, we really haven't seen a big impact. Obviously, on the upside, we're seeing some impact to oil prices and natural gas in Europe, maybe lithium, other commodities that are impacted by this. But on the downside, not that much. I mean, Russian stocks have completely disconnected from oil prices. Usually, the Russian stock market and oil prices are the exact same chart, but we've really seen a big disconnect there with Russian stock prices falling dramatically. But they only represent 3% of the emerging markets index, so it's really not having a huge impact there. I think if you look back to 2014's Russia's invasion of Ukraine, less than a 1% drop in the S&P 500, less than a 1% drop in the EM index, and they all rebounded within a week or two. So I think historically, while we can't measure the human toll, the market toll tends to be very minor from these types of events. And I quickly add that Russia is currently waiting for a written response from the U.S. on security concerns, and that won't be until, I think, the 30th. So probably nothing to happen this week militarily in Russia.